All right, so let's dive in, shall we?
Yeah.
Today, we're taking a deep dive into the world of cryptocurrency ETFs.
Yeah.
Specifically, VanEck's recent SEC filing for an ETF that's built entirely around Avalanche, also known as AVAX.
Okay.
Now, you probably already know VanEck. They're kind of a big deal in global investment management.
Right.
So this isn't just some like random crypto enthusiast like throwing spaghetti at the wall,
Yeah.
you know?
Yeah, no, this is serious business.
Yeah, this filing could be a major indicator of where institutional money is heading next.
Yeah, it's really fascinating to see how these traditional financial players are becoming increasingly interested in the crypto space.
Yep.
And it's not just Bitcoin anymore.
Right.
We're seeing a broadening of their scope with altcoins like Avalanche starting to capture their attention.
Right, and that's the big question here. What's got VanEck so excited about Avalanche? What's the story behind this strategic bet?
Well, to answer that, let's take a look at the crypto landscape as a whole. We've seen a noticeable shift in the regulatory climate. It's definitely becoming more receptive to cryptocurrency, especially in the US.
Right.
And the success of those Bitcoin ETFs, those have really paved the way and really opened the door for a whole wave of applications for ETFs based on other altcoins. And Avalanche is really riding the crest of that wave.
So this VanEck filing, it's not an isolated incident. It's part of a larger trend. It's almost like a race to bring these altcoins into the mainstream investment world.
Exactly. And the VanEck filing itself, it provides some interesting clues. They're proposing an ETF that directly tracks the price of AVX,
Okay.
offering investors a really straightforward way to gain exposure to the Avalanche network's performance. But what's really interesting is the language that they use. It highlights Avalanche's unique features, its speed, its low transaction fees, and its compatibility with the Ethereum virtual machine. These are all points designed to appeal to institutional investors who are looking for scalable and efficient blockchain solutions.
So they're not just saying, hey, here's an ETF. They're crafting a narrative. They're presenting Avalanche as a solution to some of the limitations of other cryptocurrencies.
Yep.
Almost like they're positioning it as the next big thing.
Yes, exactly. And they're not the only ones in this race either.
Right.
The article we have, it mentions this flurry of applications for ETFs that are focused on other altcoins too. We're talking XRP, Solana, Litecoin, even Dogecoin is in the mix.
Dogecoin. Wow. I guess even meme coins are getting a seat at the big table now, huh?
It's certainly an interesting sign of the times. And the potential impact of these altcoin ETFs is huge. A JP Morgan report we have predicts that their approval could usher in billions of dollars of new investment into the crypto market.
Wow.
This isn't just about individual investors dabbling in crypto anymore. We're talking about institutions, hedge funds, pension funds. The big players are entering the arena.
And that kind of influx of capital could have a ripple effect throughout the entire crypto ecosystem.
Right. Absolutely. It could further legitimize cryptocurrencies, accelerate their adoption, and potentially lead to a whole new era of innovation and development. Think of it as like opening the floodgates, allowing institutional money to flow into a space that was previously considered too risky or too volatile.
Yeah. Okay, but let's step back for a second. I'm picturing you, the listener, thinking, hold on, what exactly makes Avalanche so special?
Yeah.
What is it about this particular blockchain that's got everyone so hyped up?
That's a great question. And to understand Avalanche, we really need to go beyond the basic comparisons. You've probably heard it compared to a multi-lane highway, faster and more efficient than Bitcoin's single lane. That's true, but it's just scratching the surface. What really sets Avalanche apart is its unique consensus mechanism. It's called Snowman.
Snowman.
Yeah.
That sounds intense. What's so special about this snowman thing?
Think of it as the brains behind Avalanche's speed and scalability. It's a consensus mechanism, meaning it's the way the network agrees on which transactions are valid and in what order. But Snowman is different. It's designed for high throughput, meaning it can handle a huge volume of transactions very quickly. This is crucial for any blockchain that wants to be used for real-world applications. No one wants to wait an hour for their coffee purchase to go through, right?
Definitely not.
Right. So Snowman, it keeps things moving smoothly. Yeah, so Snowman, it keeps things moving smoothly, but how does it actually work? Is it like some super complex algorithm that only a crypto wizard can understand?
Yeah, is this like way over my head.
No, not at all. It's actually quite elegant in its design. Imagine like a network of validators, each one responsible for verifying transactions. In a traditional blockchain, they might all have to like check every single transaction, but with Snowman, they only need to check a small subset, which makes the whole process so much faster. It's kind of like dividing a huge task among a team of experts, each one focusing on their own specific area.
So it's about efficiency and specialization, and that's what allows Avalanche to handle these high transaction volumes without getting bogged down.
Exactly. And this efficiency, it's a major draw for developers who want to build applications on Avalanche. They know that their apps will be able to handle a ton of users without sacrificing speed or performance. This is especially important for things like decentralized finance, where transactions need to be processed quickly and reliably.
So Snowman is like the secret sauce, the engine that makes Avalanche so powerful.
Yeah.
But let's shift gears for a moment and talk about the elephant in the room, the SEC. They're the gatekeepers, and we know they can be tough, especially when it comes to crypto. What kind of scrutiny do you think this VanEck filing is going to face?
Well, the SEC's primary concern, it's always going to be investor protection. They want to make sure that this Avalanche ETF is structured in a way that mitigates risks and safeguards investor interests. And they have a lot to consider. They'll look at how the ETF will hold the underlying AVAX tokens, how the price will be tracked, and the overall transparency of the fund's operations.
So it's not just about the technology itself. It's about the entire structure of the ETF and how it's designed to protect investors. Do you think that the SEC's stance towards crypto has softened at all? Are they more open to these kinds of products now than they were a few years ago?
Oh, I think it's fair to say that the SEC is becoming more receptive to the idea of crypto ETFs. The success of the Bitcoin ETFs has definitely played a role in that shift, but they're still going to be very cautious, and rightfully so. The crypto market is still relatively young, and there are still a lot of unknowns.
So it's a balancing act. They want to foster innovation, but also protect investors from potential risks. And speaking of risks, what are some things investors should be aware of when considering an Avalanche ETF?
Well, the most obvious risk is the volatility of the crypto market itself. Crypto prices can fluctuate wildly, and AVAX is no exception. Investors need to be prepared for the possibility of significant price swings, both up and down.
So buckle up. It's going to be a bumpy ride. But isn't that part of the allure of crypto? The potential for these huge gains, even if it comes with higher risks.
There's definitely an element of that, but it's important to approach crypto investments with a clear understanding of the risks involved. Don't invest more than you can afford to lose, and don't chase quick profits. A long-term perspective is essential in this space.
Okay, so volatility is a given. What other risks should investors be mindful of?
Well, another key risk is regulatory uncertainty. While the SEC has been moving towards a more open stance on crypto, the regulatory landscape is still evolving. There's always the possibility of new regulations or interpretations that could impact the value of an Avalanche ETF.
It's like navigating uncharted waters, right?
Yeah.
There are risks out there, but you can't always see them coming.
Exactly. And another thing to consider is the technology itself. While Avalanche has a lot of promising features, it's still a relatively new platform. There could be vulnerabilities or technical challenges that haven't been discovered yet.
Yeah, it's important to remember that crypto is still in its early stages. We're all pioneers, in a way, exploring this new frontier.
And as with any frontier, there are bound to be surprises and setbacks along the way. But that's also what makes it so exciting.
Okay, so we've talked about the risks, but let's flip the coin and talk about the potential rewards. What's the bull case for Avalanche? Why should investors be excited about this platform?
Avalanche has a lot going for it. It's one of the fastest growing blockchain platforms in the world, attracting this vibrant ecosystem of developers, users, and investors. And it's not just about hype. Avalanche is solving real-world problems with its speed, scalability, and interoperability.
Yeah, it seems like they've really thought this through, addressing the limitations of earlier blockchains. But let's bring it back to VanEck. Is this move a sign that Wall Street is finally taking altcoins seriously?
I think it's definitely a sign that Wall Street is paying very close attention. They're seeing the innovation happening in the altcoin space, they see the potential returns, and they don't want to be left behind. But it's not just about FOMO, fear of missing out. They're being strategic. They're looking for opportunities where these technologies can solve real-world problems and, generate significant returns. Avalanche, with its speed and scalability, it fits that bill perfectly.
Yeah, it sounds like they're not just dipping their toes in the water anymore. They're wading in, maybe even testing the waters for a full-blown dive. But as we've discussed, the SEC has the final say. What kind of impact do you think their decision on these altcoin ETFs will have on the crypto market as a whole?
I think it's going to be a watershed moment. If the SEC gives the green light, it'll send a powerful signal to the market. We could see a flood of institutional capital just pouring into the crypto space, driving up prices and accelerating adoption. It would be a huge validation of the industry, demonstrating that regulators are willing to embrace this new asset class.
It'd be like breaking down a dam, wouldn't it? Unleashing this torrent of investment that could completely reshape the entire landscape.
Exactly. But on the flip side, if the SEC rejects these applications, it could have a chilling effect. It would signal this continued hesitancy and uncertainty from regulators, potentially discouraging institutional investors and slowing down the growth of the crypto ecosystem.
So the stakes are incredibly high.
Mhm.
This decision could really determine the trajectory of the crypto market for years to come. It's exciting and a little bit nerve-wracking all at the same time.
Yeah.
Okay, last question before we wrap up. Assuming these altcoin ETFs do get approved, how do you see this changing the dynamics of the crypto market? Will it lead to this greater mainstream adoption, or are there potential downsides we need to consider?
Well, it's a complex question with no easy answers. On one hand, increased institutional involvement could bring greater liquidity, stability, and maturity to the market. And this would make crypto more attractive to those mainstream investors who might have been hesitant before because of the volatility or security concerns.
Yeah, it would make crypto feel less like the Wild West and more like a regulated, established market.
Precisely. And that could be a huge driver of adoption. But there are potential downsides, too. One concern is that this institutional involvement could lead to greater centralization, with a few large players controlling a significant portion of the market. And this could undermine that decentralized ethos that was so central to the original vision of cryptocurrencies.
So it's kind of a trade-off. Greater stability and adoption might come at the expense of some of the core principles that made crypto so appealing in the first place.
Yeah, it's a delicate balance and one that we'll need to navigate very carefully as the crypto market evolves. It's important to remember that this technology is still in its infancy. We're all still learning as we go.
That's a great point to end on. The world of crypto is constantly changing, full of surprises and new developments. What we've discussed today is just a snapshot of where things stand right now. Who knows what the future holds?
The only thing we can be certain of is that it'll be an interesting ride.
And that's a wrap for this deep dive. Thanks for joining us as we explored this fascinating world of altcoin ETFs and VanEck's big bet on Avalanche. Until next time, stay curious, keep learning, and remember the future of finance is being written right now.